Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Sunday, March the 20th. The year is 2022. Let's talk trading. It's time for the weekly open and gap. As always, these videos are for educational purposes only. Your results may differ from mine. So, the week. As we can see, all gaps but one have filled. And so far, the pound is heading south. We're 16 pips below the weekly open, 24 off the high, and only 5 off the low. And we can see here, we opened above the pivot and above the previous midpoint. If we take a quick look at the monthly, you can see we are below the monthly open and 283 off the high, 154 off the low. And we are putting in the opening range for the day, and you can see we're well below the opening range for the year and for the month. Looks like I need to scrunch this down a little bit so we can see in January, February, see those opening ranges. And you can see we are 372 pips below that yearly open, 155 off the low, and 595 off the high. Question is, will it come back to the midpoint? We'll have to wait and see. And Friday, we had an inside bar on the pound. There's some inside bar action here on the daily. Not much on the weekly, a whole lot more on the monthly. But you can see here, it looks like we've got a long trigger, 131.96, and a short at 131.10. So remember those two numbers this week, and let's see which ones we break. As far as the range goes, we're only 7 hours into the trading day. And as usual at this time of day, we don't have much of a range. In fact, we only have 28 pips of range. It's like the pound hasn't even gotten out of bed yet, right? You can see here, we went above the weekly open and we filled that gap. But we then crossed below the weekly open and we actually hit the sell zone a couple times, and those two trades or entries would have paid off. The rat, not enough range for the rat. In fact, I got an email. A trader was asking me about frequency distributions in the rat, and so maybe we'll talk about that a little bit. You know, the main thing about the rat to know is, I was just looking at daily charts. I don't even remember how long ago it was, but when I looked at the daily chart, I noticed that the wicks on the pound were huge. They were usually in the range of 20, 30 or more pips, and that's what gave me the idea for the rat trade. And so I ran the frequency distributions, and lo and behold, it seemed like the pound didn't like to stay in the rat zone, which at the time was within 20 pips of the daily high or low. But like I said, I think that was probably over a decade ago when I came up with the rat. And now, because of the market changing, we've got the rat zone set to 15 pips. That's where the sweet spot is. And that's when I came up with the idea of the smart rat. But I think they were really looking for some hints on when to trade it, about the reversals. And, I've been talking about the average true range, and the distance from the open, or the actual range for the pound. So one thing that when Walmart and I trade the pound, we know the pound usually is going to range somewhere between 70 and 90, and that's the best time to look for the reversals after the pounds moved 70 to 90 pips. And until then, you start to look for the breakout, trading away from the daily open. So daily, we took out the pivot. Weekly, we haven't. So far this week, we haven't hit the pivot. We've got a couple of missed pivots from earlier in March. Actually, we've got one from March and one from February. This is actually a February missed pivot here. As far as the month goes, we still missed that pivot. We missed it by 7 pips, so we'll have to wait and see what happens. You can see in and out of the upper wick zone one time. And as far as the range, once again, only 29 pips right now. We pretty much went over these readings on Friday on the weekly wrap up. So since nothing's changed from last week, so we'll just have to wait and see what happens throughout the week. Simple price action screen. We've got the sweet spot lines every 10 pips with the Walmart lines highlighted here. But you can see these hourly ranges are not conducive to sweet spot or Walmart line trades. So that's part of knowing when to trade, which is very important. Kind of like fishing. You have to know when the fish are biting. Looking at some price action here on the higher low, lower high with the semaphores. You can see we had a lower high trade trigger right there, and that proved to be profitable for a few pips, about 3-4 pips there. And it looks like we've got a lower high situation, or higher low, sorry, right here, but that's only a 2-ball. Might want to wait for the 3-ball to appear. And that's, part of trading. In fact, I was watching another trader's trading video today, and he was talking about concentration or focus and just being able to shut out all the distractions. And part of that was waiting and for your moment. But it made me think of something, and this might help. If you play a sport or you play a game, usually you get wrapped up in that game. Like especially if it's a fast moving game like baseball or hockey, even though some people, baseball is a lot of standing around waiting, but, once the ball's put into play on a hit, things can happen. That ball can move pretty fast, over 100 miles an hour. And if you're not paying attention, you could get hurt. But usually when you're in a game, you're like totally in the game, whether it's basketball or something. But then there's some games where, it might just be you, an individual game like tennis. And you have to focus. Or you might just be playing, a card game, or you could be playing, a board game like Monopoly or something. But my point is that when you're involved in the game, that's what you're focused on. You don't usually get distracted because you're too busy playing the game. Well, trading should be the same way. But with the computer, it's so easy to open up another tab or another window. So easily be distracted. And the thing is sometimes when you're distracted, just that split second, what happens is you might miss that entry. And then You might do something stupid and then try and get in, and maybe you get in a pip late or 2 pips late or 3 pips late, and that might have been all the profit there was. I mean, so it's like I just said, I mean, I couldn't have planned this one better. What happened there, I said, you might want to wait for the 3 ball. Sure enough, there's a 3 ball. There's the cross right there at the higher low line, 1.6, 1.8 pips at the moment. I see a 1 ball, and I have to make a decision. Does that 1 ball mean it's going to continue down, or does that 1 ball mean it's going to reverse? You don't know. You just don't know. Usually for me, I would punch out. Sometimes I, regret it, but you see how it's moving back right now? That's usually seems to be what happens, on a 1 minute chart. Now, if you switch over to the 5 minute chart, it might be a different story. But then again, you have to decide what you're trading. Are you trading on the 5 minute chart, or are you trading on the 1 minute chart? You might get different signals. So for example, here, if you were to take this horizontal line as a trade trigger, you can see this was a former support line, and it broke it right here. So in this 5 minute candle, you might want to sit and wait. Still has a minute and something to go, so you might just want to see, do I take my pip or do I wait? Because right now I'm moving off of 1 ball, even though on the 1 minute chart I ran into a 1 ball. But you can see here there was support at the 54, support at the 53. So you might say, well, it broke this support. I look to the left. Doesn't seem like there's been too much movement except that last candle that pushed up. And so if you waited, there was a couple of more pips. So see, that's the difference between trading on that 1 minute chart versus the 5 minute chart. But you never know. So as you can see right here, off that 1 minute chart, it's 3.9 pip difference. One thing to note is from this 3 ball to this 3 ball, usually when you get a couple 3 balls and price does this, it usually hits the 50% level, which just kind of eyeballing it, it looks like it'd be right about here. But hopefully this proves my point about being focused, being able to take that trade at the proper level, and then once again being focused, looking at the charts, making your decision to stick or not. Because see right here, you can see price just moved back a couple of pips. Yeah, from 51 to 53. That's 2 pip reversal. So if I would have taken my money off the table here as opposed to here, see, it's easy to get upset over this, but that's brain management. That's got nothing to do with what's happening in the market. That's what's happening in your head, because you see you're almost right back where you might have taken the money off the table. But once again, this is just looking at the chart, seeing what's going on, and you can see here it came right back down to that lower high, which would give you an opportunity to go long. So, fellow traders, that should really show you it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is the TheRumpledOne. Over and out. And by the way, I hope you had a fun and safe weekend. See you tomorrow.